We used to believe money was simple, something you could hold, earn, and save. But what if that was never the truth? What if money has been slowly reprogrammed, shifting from something real to something designed for control? Today, we'll follow the secret timeline, a story hidden in plain sight of how money transformed from gold and paper into a digital leash. And by the end, you'll understand why every transaction, every paycheck, and every free banking innovation is part of a system that was never meant to set you free. Money began as trust, a promise, not a product. In the earliest civilizations, Mesopotamia, Egypt, and later Rome, money wasn't created by governments, but by merchants and temples. It represented stored labor and value agreed upon by society. But there was one problem. The more power a state had, the more it wanted to control that trust. So empires began to debase coins, mixing gold and silver with cheaper metals. Every debasement funded wars, monuments, and dynasties, but it also taught rulers a lesson. If you can control the medium of exchange, you can control everything that moves through it. When Rome fell, so did the illusion of sound money. And for nearly 1,000 years, money became faith-based, issued by kings, measured by weight, and manipulated by decree. The next phase of money's transformation began in Florence and Venice, where merchants grew tired of hauling gold across dangerous roads. So they created paper receipts, promissory notes redeemable for metal stored in vaults. It seemed efficient, but the innovation that followed would change history forever. In 1694, after a costly war, England's monarchy faced bankruptcy. To stay afloat, it approved the creation of the Bank of England, the first true central bank. Here's the hidden twist. The bank didn't lend the king gold, created money from nothing, lending it to the government with interest. From that moment forward, every note issued, every pound, every dollar that came later represented debt, not wealth. Money was no longer a store of value, it was a promise to pay, forever owed back with interest that could never all be repaid. The idea spread like wildfire. France, the Netherlands, and eventually America, all built on the same formula. By the 20th century, the world's money was a debt machine, run by central banks whose only true asset was our collective faith in the system. The Great Depression revealed the danger of paper promises. Banks failed, gold vanished, and trust evaporated overnight. To rebuild control, the world gathered in 1944 at Bretton Woods, New Hampshire. There, the US dollar was declared the global reserve currency, backed by gold, while other currencies were tied to the dollar. It was a new era of stability. On paper, but behind the scenes, the US was spending more than ever on wars, welfare, and worldwide influence. By 1971, foreign nations started asking to redeem their dollars for gold. The vaults couldn't handle it. So on August 15, 1971, President Richard Nixon went on live television and did something unthinkable. He closed the gold window, ending the dollar's link to anything real. Money became purely digital paper, backed only by government decree, fiat currency. From that day on, every dollar in existence was created through debt issuance, typed into existence by banks and central banks with a few keystrokes. Money was no longer scarce. It was programmable. When money lost its anchor, something else filled the void. Debt expansion. Governments learned they could print their way out of every crisis. Central banks learned they could manipulate rates to create bubbles, then bail them out when they burst. Every solution required more money, and every dollar created made your savings worth less. From 1971 to today, the dollar lost over 85% of its purchasing power. Housing, education, and healthcare soared, but wages stagnated. And while citizens scrambled to keep up, banks and corporations grew fat on credit expansion. Then came the next transformation, digitization. Online banking made transactions faster, but also traceable. Payment apps made life easier, but also trackable. And as physical cash slowly disappears, the ultimate goal becomes clear. A world where every dollar can be monitored, limited, or erased at the press of a button. Each crisis since 2008 has accelerated the same pattern. When the global financial system collapsed under toxic debt, governments didn't reform, they bailed out. When the pandemic shut down the economy, central banks printed trillions. Every so-called rescue only deepened dependence on digital systems, stimulus payments through apps, QR codes for relief programs, and soon, the next frontier, central bank digital currencies, or CBDCs. CBDCs are often sold as innovation, faster, safer, more inclusive, but beneath the marketing lies a dangerous truth. They grant governments the ability to program money itself, setting limits on where, when, and how it can be spent. Imagine a future where your account balance expires if you don't use it, where certain purchases are restricted for environmental reasons, where dissenters can be silenced not with force, but by freezing their wallets. This isn't a conspiracy. It's policy quietly tested in nations like China, Sweden, and the Bahamas. And now, under development by the Federal Reserve and European Central Bank, money is no longer a tool of exchange. It's becoming a tool of compliance. Our financial system now mirrors our digital lives, free, convenient, and constantly observed. Every purchase, swipe, and login creates data. That data feeds algorithms that determine credit scores, insurance rates, and even political influence. The same way social media learned to manipulate behavior, the financial system is learning to shape spending patterns. In 2023 alone, over 92% of global transactions were digital in some form. And in most developed countries, less than 10% of all money now exists in physical cash. We've traded privacy for speed, freedom for frictionless convenience. And the final step, a world without cash, is already being celebrated as progress. But history tells us, when money becomes data, power follows data. Conclusion: the takeaways in warning money is not value, it's control. Whoever issues it shapes society. Takeaway number 2. Every crisis in modern finance has been used not to fix the system, but to deepen dependence on it. Takeaway number 3. The final form of money will not be physical, nor free. It will be programmable. And once it is, privacy and autonomy will exist only by permission. The timeline of money's transformation isn't finished. It's still unfolding on your phone, in your bank account, and in the silent code running behind every tap to pay. The question now, S&T, whether digital control is coming, it's whether we notice it before it's complete. If you found this breakdown valuable and you want to understand how financial systems quietly shape global power, subscribe, share this video, and help bring these stories into the light.